Welcome back to the show. Today I want to ask you something that sounds simple, but I think it explains why some people build incredible wealth while others stay stuck for decades. What do the greatest investors understand about human nature that the average person completely misses?
That's one of my favorite questions because it reveals a truth most people don't expect. The greatest investors aren't experts because they can predict the future. They're experts because they understand people, including themselves. Here's something worth remembering. The stock market is a mirror of human emotion before it's a machine for making money. Every day, billions of dollars move not because businesses suddenly changed overnight, but because people change their minds. Fear spreads, confidence returns, greed takes over, hope resurfaces. The market simply reflects those emotions. Think about what happens during a market crash. The average investor asks, "How fast can I get out?" The great investor asks, "Why is everyone so desperate to sell today?" That difference in thinking has created fortunes throughout history. Warren Buffett famously said to be fearful when others are greedy and greedy when others are fearful. That isn't just investment advice. It's advice about understanding human nature. Most people naturally follow the crowd because our brains evolved to survive in groups. Thousands of years ago, following everyone else kept you alive. In investing, it can quietly destroy your returns. Another truth great investors understand is that intelligence alone doesn't make someone wealthy. Emotional discipline does. I've met brilliant people who couldn't stick to a long-term investment plan because every headline pulled them in a different direction. Then I've seen ordinary people patiently invest month after month, ignore the noise, and build remarkable wealth over time. The market doesn't reward the smartest person in the room. It rewards the one who stays rational when everyone else becomes emotional. Human beings also crave certainty. We want someone to tell us exactly what will happen next year, next month, even tomorrow. But investing doesn't work that way. The greatest investors are comfortable saying, "I don't know." Ironically, that humility often leads to better decisions because it keeps them learning instead of pretending. And then there's ego. Ego whispers, "Prove you're right." Wisdom whispers, "Protect your capital." Great investors aren't trying to win arguments. They're trying to make good decisions repeatedly over decades. One of my favorite mental models is this. Imagine the market as the ocean. You can't stop the waves, predict every tide, or control the weather, but you can build a stronger boat. Your mindset is that boat. Patience is the wood. Discipline is the anchor. Emotional control is the compass. In the end, investing is one of the few places where mastering yourself matters more than mastering numbers. Charts, financial statements, and economic reports are valuable, but they're only half the equation. The other half is learning how your own mind reacts to uncertainty, success, loss, and opportunity. The investor's history remembers didn't eliminate emotion. They simply refused to let emotion make their decisions.
That's such a powerful perspective. If today's conversation changed the way you think about money, investing, or even yourself, let us know in the comments. Don't forget to like, subscribe, and share this episode with someone who wants to become a wiser investor, not just a wealthier one. Until next time, keep learning, keep thinking independently, and remember, your greatest investment is often your own mindset.